Hello guys, welcome to a new video. And as you may be knowing that Broadcom has decided to finally do the stock split, and it is similar on the lines to Nvidia. So Nvidia did it 10 to 1, and the same the Broadcom is doing 10 to 1. And how this is gonna impact the stock, and should you be interested in this in buying to this run up, and are there any options plays that you can do in this stock? So all that we're gonna find out in this video. If you are interested, then please stick around and let's start. Okay guys, so as you can see in my screen, right, Broadcom has decided to do 10 for 1 stock split, and the date they have chosen for that is July 12th. So basically on July 12th, if you own Broadcom stock, that's gonna be split 10 to 1, and that is gonna be effective on starting July 15th. So starting July 15th, when the market opens, the Broadcom stock would be 10 to 1. So right now I believe it is about 1700, and after the split this is gonna be $170 stock, right? So before we proceed further on whether you should be buying it or not, I just want to quickly touch upon how does a stock split actually impact a particular stock, right? So what is the impact of a stock split on a stock? So I just found this one. This is kind of pretty clear, right? So stock split in general does not impact to the price or the valuation of a stock. As you can see, right, it basically it doesn't changes anything on the dollar value or the market cap of that stock. It's just a phenomena to attract more buyers into the stock, because right now one stock of Broadcom is about 1700, right? And if you're a small investor, and just buying a one stock would be pretty difficult for you, but after the split this is gonna be in your reach. So that's the idea behind a stock split. It doesn't changes anything, it just adds more liquidity in the stock market for that particular stock, right? Okay, so with that out of the way, now the big question is, should you buy Broadcom, right? And should you be interested in buying, or should you ignore it? So let's find out, right? In my opinion, if you ask me, yes, you should be interested, and I have three reasons for that. The first one I would say is Broadcom is same as Nvidia. This is running on a AI hype, and this is also a company which makes more of the chips, more of the telecom we have heard, but they make chips which kind of runs on the AI softwares and all, right? So this is a beneficiary of an AI boom that you're seeing. So this is gonna grow as the AI hype kind of progresses in near to maybe long term, right? So yes, that's the first reason to buy. The second one, right, as you can see on the graph for the revenue wise, they are a pretty solid company. Like they have grown their revenue pretty solid over the years, and this is gonna go higher if this hype continues. So yes, that is another reason to buy this. And the final one is, and this is very important, right, and this is directly linked to the stock split, and which is the liquidity part, which I touched upon in the last part, right? So basically what happens is liquidity provides small investors to get into the stock. So as let's say today a lot of people are, they wanted to buy this one, but just because the stock price is so high they cannot get into the stock, but now they would be able to get into the stock, right? So as more and more people buy the stock, it's obviously gonna increase the price of that stock, right? So that is number three reason why this stock is gonna go higher in during the run up to the stock split, and maybe a couple of days after the split, right? Beyond that, maybe it's gonna take some time to consolidate, but at least to the run up, and a week after that this is gonna go up because there will be more volume coming into the stock. Okay, the final part is, right, are there any option plays that you can do? Because my channel, as you know, I talk more about the options. So are there any option plays that you can do in this particular stock? And the answer for that is yes, there are option plays that you can do. One particular I am thinking of doing it, or there are actually two that you can do, and I'm gonna show you that in Robinhood quickly. I'm not gonna go into detail, but if you, I'll link some videos in the description. If you're not exactly familiar with those option, you can definitely go and check out more detail. I'm just gonna name them and quickly show them how this stock splits gonna benefit those plays, right? So let's talk about those two. Okay, so I'm in my Robinhood account, right? And as you can see, this is the Broadcom, and right now stock price is, as I said, it's close to 1700, right? So the first option strategy that you can do on this is covered call. Now you may ask like how you can do the covered call, right, in this, because to do a covered call, one single covered call, you need to have 160k in your account, right? So now after the split, that's gonna be possible. So what you can do is before the split, you can buy just 10 shares of it. That's gonna cost you around 17,000, right? But after the split, those 10 shares would become 100 shares. So now you have 100 shares in your account and you can play the covered call, right? So if you look at this one, if I go to the option strategy right now and I do a sell call just for a week down, right, and I do like 1700 here, you getting almost like $2,500, right? And once it splits, this is gonna also split, so in a week you have a chance to make $250 just by owning 10 shares of this. So that is the first strategy. So if you're not familiar or this is completely new to you, you can definitely go and check out the detailed video I have about covered call, and then you can come back. This may make more sense then. So that was the first one. The second one you can do is you can do put credit spread. That is basically a two-leg spread, and I'm not gonna go again detail in that, but that is if you have been doing option, you may have obviously heard the put credit spread. It's basically for mostly for the small accounts. If you do not have this full capital, you do, what you do is you do sell put, though that's the first leg that you do. You can do whatever expiry you can select, and you basically go to, let's say, 1650 as a strike price, and then you buy a put right below that, right? So this basically reduces your capital requirement and as well as your credit, but this is a very good bullish strategy that you can apply, because assumption is the stock is gonna go up and it's definitely gonna end up higher on July 12th, right? So because that's the run up to the stock split, so I'm expecting this is gonna go higher than that. And put credit spread is one of the wonderful strategies, bullish strategies in options that you can make use of during this stock split. So that was it, guys, for this video. I hope you liked this video. If you did, do hit that like button and subscribe to the channel. I make a lot of videos around options and I'm sure you're gonna benefit out of that. I'll talk to you in my next video. Till then, happy investing and bye bye.